Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Hyde, Taylor Riggs counting you down to the closing bell, here to help take us beyond the bell. Our global simulcast partners, Carol Massar and Tim Stenovec. We welcome in our audiences across Bloomberg Television, Radio, and YouTube. And Carol, let's get right to it. Looking at a NASDAQ 100 down 4% here on the day. The S&P down 2.5%.
Yeah, really rough, certainly in the equity going. We're focusing on that. What's interesting is stocks are down, bonds are down too, and I guess Taylor's going to talk about this as well, but I think also problematic, no doubt about it, are those higher yields.
Yeah, Romaine, you mentioned the NASDAQ 100. We're seeing the biggest decline in the NASDAQ 100 since September of 2020, so we haven't seen a loss like this in more than a year.
Are yields the reason why we're seeing this, though?
I mean, you could argue that today is sort of
right?
another reflationary day. We've talked about the ECB and the BOE really pivoting.
Right.
You finally have sort of the global central banks all tackling inflation, Caroline, but it's only 5 basis points on the day, though it is of note that on a 4% move, you're not seeing a flight to quality. You're not seeing a safe haven bid.
118 on a 2-year, 181 on a 10-year. Isn't that below where we were just a couple days ago?
Well, this is a perfect storm, though, to a large degree. This is idiosyncratic news, taking away the rug that we had of support underneath us, because before, we'd all just got our heads around a hawkish Fed. We then get that amplified with the BOE and the ECB, but we then don't have the support of an Alphabet and an Apple on the day. Instead, you get the concerns around a Meta and indeed some of the Spotify's, the focus of a consumer base right now.
Do we get that support from Amazon later tonight?
I think, Carol, as Caroline said earlier, that is going to be the key question. Of course, maybe less impacted by some of the advertising revenues, but if you look at Pins and Snap, they are going to be the big advertising bellwether as well.
All right, well, when you're looking at the S&P, when you're looking at the NASDAQ, the two biggest drags right now on them are, of course, Meta Platforms down 26, 27%, and Amazon down almost 8%. Here are your closing bells right now. Dow Jones Industrial Average going to finish the day down by about 1.5%, 500 points. S&P are going to finish the day down by 2.4%, 110 points. The Russell 2000 going to finish down by about 38 points, 1.9%. But let's flip it up and take a look at the NASDAQ indices. The composite is down 3.7% here on the day, but the NASDAQ 100 is going to finish the day down 4.2%. And I'm just going to double check. This is the biggest decline that we've seen going back to September 8th of 2020.
Talk about a market reset. What's interesting is you may have thought there was no place to hide, but nonetheless, if I look at the big picture, S&P 500, 95 names actually posting gains, a lot of it related to earnings and the business updates from various companies. 408 names lower in today's session, Taylor.
I know we're going to cut us off the minute Amazon comes out, but quickly, just take a look at where we are in terms of the level 2 sectors of how we sort of ended the day here. It does not look good. There's a lot of red on the screen. There's 3 sectors in the green, but really it's only telecoms, hardware and equipment, and food and beverage.
Amazon sales crossing the wire right now. Fourth quarter EPS coming in at $27.75. The street was looking for $3.77. I'm going to double check that number to make sure that comparison is right. Net sales number, $137.4 billion. That's pretty much in line with what the street was looking for. Operating income at $3.5 billion. The street on average was looking for $2.43 billion. Here's your forecast. 1Q net sales, $112 billion to $117 billion. That's the range. The street was looking on average for 120. So that is a miss. Amazon Prime annual memberships prices actually going up here. A lot of headlines crossing the wire, guys. But overall, it looks like the fourth quarter numbers beat first quarter numbers, first quarter guidance missing.
Yeah, this is not a good look ahead in terms of Amazon. And as we say, we've got to unpack what happened with Meta on the day, where you saw a $252 billion market value erase. That is the most we've ever seen in history of these U.S. equity markets, as you've been so cleanly showing what sort of a fall we see in Amazon if indeed their net sales outlook looks bad.
I just real quickly here, their 1Q operating income, and we're going to double check to make sure these comparisons are right, but they're given a range of $3 billion to $6 billion. The street was looking for $6 billion. So the guide on that bottom, on the sort of the bottom end of that range is half of the average of estimates. So we're going to double check to make sure these numbers are matching up right. But if that is the case, that would be a pretty big miss. But you look at the share reaction here, guys.
It's rallying.
Look at that, Carol.
Big time. It's up more than 12% in the after hours. So you do wonder whether or not those numbers aren't right. It's also showing some pricing power, right? By raising Amazon Prime. That's big.
Of course, hearing from Andy Jassy, the CEO of Amazon, saying we are experiencing higher costs driven by labor, supply shortage, and inflationary pressures. These issues persisted into the first quarter due to Omicron. But despite these challenges, yes, we're excited, we're optimistic, blah, 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 but really highlighting the 40% AWS growth.
That 40% AWS growth is phenomenal.
Yeah, the Prime news is huge as well. It shows that Amazon has pricing power, obviously. But look, Prime membership was just last raised in 2018. It was $119 a year. The monthly cost for Prime is going up too, from $13 to $15.
Poonam Goyal, senior U.S. retail analyst for Bloomberg Intelligence, joining us right now. Poonam, what jumped out at you?
The Prime membership increase. That's great that they're able to increase the price up because a lot of that helps them offset rising costs that they've been dealing with, whether it's labor or freight. Aside from that, we thought the fourth quarter sales numbers were pretty good. 9% is what they reported. They had guided, and that was on a lowered guide of 4 to 12%, so relatively in line. We're not too surprised to see 1Q guide a little softer because that's what we've been seeing across the board. They are up against very tough comparisons as they, pass through the pandemic.
Yeah, it definitely shows pricing power there. What's interesting too is I always think about Amazon Web Services, right? This is such an important metric. Poonam, how do we think about that one? Fourth quarter AWS, $17.78 billion. That was a little bit better than the street estimate of $17.23 billion.
Yeah, we called that. We saw great numbers out of Microsoft earlier, and we had said that AWS should hold strong as well. We continue to be very optimistic on AWS. They have strong margins, and the margins will get better as they gain scale. So overall, the growth rates that we've been seeing across AWS should continue into 2022 as well.
It's sort of fascinating that Amazon used to be this business where we always waited for profit. They always wanted to reinvest. They wanted to make you bet on sales instead. But now we're getting a net income number that is so significantly higher than the previous year, $14.3 billion compared to the $7 billion a year ago. And it's notable that it's a change of leadership within that year as well. What do you think that the market really wants to see now out of Amazon? How do they use this pricing power to their advantage?
Yeah, the profits are all really coming from AWS, right? If you look at the composition of profit, about 70 to 80% of that is AWS. It was 50% prior to the pandemic. So that's where the profits are coming from. And we continue to expect that to be the case in the future, especially as AWS profits go from 30% to 35% in the longer term.
Are we still thinking that this is a logistics company more and more?
It will definitely become a logistics company. It needs to support its growing retail business, whether it's 3P or 1P.
All right, Poonam Goyal helping us break down the Amazon earnings crossing the wire. Senior U.S. retail analyst for Bloomberg Intelligence. 16% jump right now in the shares in the after-hours session. Other earnings crossing the wire, Taylor.
Yeah, this is interesting. The stock was up big after hours, but now erasing some of those some of the gains because fourth quarter monthly active users for Pinterest, 431 million. That's light of an estimate of 447.3 million. The fundamentals, the number, fourth quarter revenue looks good, 847 million versus estimates of 832. You go down the income statement, adjusted EBITDA 350 versus estimates of 331 million. EPS comes in at around 49 cents, improving on the estimates of 42 cents. But monthly active users looks just a little bit light here at 431 million versus estimates of 447.
All right, let's get to Ford too, because that stock's moving in the after hours. Their fourth quarter adjusted EPS 26 cents a share. That's a big miss. The estimate was for 45 cents. Also giving an outlook, talking about 2022 adjusted EBIT of 11.5 billion to 12.5 billion, compared with the estimate of 12.17 billion. Keep in mind, this is a company that is also, like so many automakers, Tim, right? Readjusting, refocusing on EVs, and that's certainly a big part of the Ford story. We just had that Bloomberg story that talked about the billions that they're going to be spending on.
Yeah, that's right. Bloomberg reporting February 1st that it's going to boost spending on EVs by as much as $20 billion over the next decade. Hey, I want to get an update on the F-150 Lightning plug-in pickup truck, how things are looking as far as that goes, because that's a very important product for the company. And then, of course, chip supply and semiconductors, how the company is thinking about supply chain issues as well.
Let's get back to some of the big earnings that are coming out. Pinterest, of course, as we know, sort of seen an improvement on the adjusted earnings beat. We're still awaiting results of Snap any moment. Let's do more on this with Mandeep Singh, senior technology analyst for Bloomberg Intelligence. There were some concerns, frankly, after Meta, Facebook yesterday. What are you hearing from Pinterest that looks good to you?
Well, so a lot of bad news was priced in, and I think the fact that they beat on the top line was kind of, a positive. But when you look at the MAU numbers, 6% decline. With social media companies, it's all about user growth and engagement, and we know that time and again, and this doesn't look good for the long term. So
the share price.
It's still up 23%. Is that why you were saying that so much of this had been priced in and that maybe isn't as bad as feared? Is that how you could frame it?
Yeah, exactly. I mean, in the case of Pinterest, I mean, the stock has been hammered, since the beginning of the year. And look, I don't think this changes anything in terms of the long-term fundamentals. They still have a problem when it comes to user growth. But at the same time, I think this was a relief rally, if you can call that, given how bad people were expecting after Meta, yesterday.
And the share price increase, pretty eye-popping here, up 22%. We should point out the shares had fallen almost 20% over the previous 2 days, so kind of taking us back to where we were a couple days ago. We've been sort of, wringing our hands all day about Meta and just the broader sort of social media space here. When you look at names like a Pinterest and to that extent Snap, which I think we're still waiting to get those results here, do you see them as a little bit more resilient as far as an ad-based social media business model, a little bit more resilient than Meta?
Well, so think of it this way. If you size the top 10 platforms, by monthly active user base, these are among the most scaled platforms out there when it comes to, any type of internet marketplace or scale. And so I don't think, they're going to zero in terms of revenue. The question is, after what we have seen with the COVID pull forward, and that is where I think the key question mark is. With COVID, there was a pull forward in user growth. Can they find more users? Can they grow engagement? We know engagement is a concern because people aren't spending as much time on the feed. They want more video content. There's a fight for creators. And that is where I think the challenge lies for the likes of Pinterest and Snap.
We're just looking at a market reacting to some of these outperformances after hours. We're looking at the Qs, so the Nasdaq 100 linked QQQ gaining 1.2% in after hours as Amazon beats, as Pinterest shows significant growth in its share price after hours of some 18%. And for all of our hand-wringing that we're then going to see whether or not Snap can live up to. From your perspective, Taylor was so eloquently putting some of these worries about analysts as to what the pullback in advertising means for a global growth story. Do you have any of those worries?
Yeah, clearly, I think if Meta is guiding to, mid to high single digit, it shows the ad spending is decelerating.
I'm going to cut you off because we're getting Snap earnings. I apologize for doing that. Let's take a look at this. Fourth quarter revenue comes in. Looks like an improvement, $1.3 billion versus estimates of $1.2. Fourth quarter adjusted EBITDA, $326.8 million versus estimates of $179. Looking forward, first quarter revenue, big improvement, $1.03 to $1.08 billion. Estimates here for $1.02 billion. They're talking about making significant progress on the Apple platform changes and saying that many headwinds that advertisers faced in the fourth quarter, those do remain. So, Mandeep, we're sort of hearing this, that maybe it looks good. And the first quarter revenue push forward to Snap doesn't seem to be taking into some of the commentary that they're getting from their own advertisers.
Yeah, look, again, this is a bidding mechanism, right? So in our view, a lot of the ad spending could be moving towards Android right now simply because the ROI on ad spend when it comes to Android is higher. Apple is the one who has rolled out all these IDFA changes that has hurt targeting. On Android, these companies continue to do well, and all these platforms are present on Android. So maybe part of that has to do, just with the fact that ad spending continues to do well on Android, and that's what we saw with Google, YouTube, and I think because these are smaller companies, it may have helped the results.
Hey, just a quick reset. Ford is down 5% after earnings. Pinterest is up about 13%, and we've got Amazon up about 12%. Snap rallying big time in the after hours. Help me out, Mandeep. Before this earning, the stock was down about 48%. It's now rallying, more than 20% here in the after hours. What's the right level for a name like Snap? I know you don't give price targets, but how do we understand the volatility in a name like this?
Well, so clearly, all these names were trading at over, 15, 20 times sales. That was too high. That was pricing in 40, 50% growth. We know going forward, if you look at the guidance, none of these companies is expecting to, grow north of 30%. And these are smaller players. So if there is a deceleration in the overall ad spending, which we think will happen, I think the multiples ought to be much lower, and they're probably bouncing back. It's a relief rally because the news wasn't as bad as feared, but it doesn't change the fundamentals here.
Hey, Mandeep, I want to go back to what you said about ad spend increasing on Android, because, I mean, just a few years ago, Snap executives were kind of shrugging off the population of Android users and really focusing on iOS. They absolutely were. Yeah, they were. I mean, it took really long for Snap to develop on the Android platform.
Yeah.
And they got in trouble for making comments about that. And I'm wondering how you can help us understand the shift in ad spending there and how that changes priorities, because that customer is not as big of a customer as an iOS user.
No, I mean, in terms of install base, Android is a bigger install base, but you're right. When you look at the CPMs for Android devices, it's probably lower than iOS users. Well, guess what? Snap did the right thing in terms of developing that Android app, and maybe it's paying off right now, because had it been just iOS, they would have been more hurt than what we are seeing in the print right now.
Was Meta just therefore the outlier? Because we're looking at Amazon even managing to shine a light on its own advertising area, and it's showing growth from profitable business line. We're seeing Snap doing well, Pinterest not falling, even though you sounded a little bit more dour on it than the market seems to be signaling. Was Meta just the perfect idiosyncratic storm?
I don't think so, simply because they are the bellwether for social media ad spending, and the scale at which Meta operates, they are telling you something that IDFA is having an impact, and it's hurting everybody. It's just the scale for Pinterest and Snap is much lower when you compare it to Meta, and they have been able to, divert the traffic or make sure they're able to, change the CPMs on the Android side. But to me, this doesn't change the fact that search is doing better. That's what you see in Amazon's results. That's what we saw with Google search. So ad spending is clearly shifting. It's just that the social media, aspect of it, whether it's, losing share to TikTok. Facebook called that out repeatedly yesterday. And there is a fight for creators. When you think about social media, it's all about creators now. Who has the creators? And guess what? You have to pay up the creators. That's going to hurt the margin profile of all of these businesses. Even Snapchat needs creators if you want more video content. And that is what I think I'm curious to see what the management says on creators and video content, what Facebook called out yesterday.
Someone get this man a raise. Mandeep Singh, what would we do without you? Senior technology analyst here for Bloomberg Intelligence. Carol, over to you.
All about content, isn't it? Snap up 32%. Ford going in the other direction. It's down 6%. Let's bring in our Ed Ludlow there on the West Coast. Covers autos, covers so much for us. We know, Ed, that Ford has been spending big. They, too, like all the big automakers, focusing on the move towards EVs. But nonetheless, some disappointment here by investors.
Yeah, look, I think this is the 22 outlook, and it's not just the financials, it's the big picture that Ford's presenting on page 4 of its earnings statement, which investors quite clearly took a little bit of time to get to because that was a delayed reaction. They missed on the bottom line in the fourth quarter just gone, but beat on the top line. They navigated what they're calling ongoing supply chain disruptions. We kind of knew where they'd be. They raised their full-year adjusted EBIT to a range of $11.5 to $12.5 billion, but then it's a long list of worries. Q1 will reflect supplier shortages related to COVID shutdowns and semiconductors, ongoing variability in supply of key components, increased commodity costs with a possible inflationary effects on a broad range of other expenses. The list goes on. So I think the concern here is that they're in a moment where they're ramping up that EV production, the costs are rising, which is hitting the bottom line, and they're managing that transition from gas to EV at a time where their supply is limited and impacted by a shortage of parts.
Are investors concerned, Ed, that they're not making that transition quick enough? On our live blog, we point out that Ford said 40% of its offerings will be EVs by 2030. More than half of GM's lineup will be EVs by that time. Come on, you got Tesla right now with 100% EV offerings, and then X number of companies, startups working on that as well.
Yeah, so the goal is to produce 600,000 EVs annually by 2023. That's their target. Emily Chang asked Jim Farley about 10 days ago now, why don't you do what GM did and say there's a hard date, whether it's 2030, 2035 for all EVs? Jim Farley points out they are big in commercial vehicles, and they just don't see a world where the commercial or fleet buyer goes all electric at the same pace. So that is one answer. But I'm hoping that they ask about the scoop we broke earlier in the week on the call about this plan to accelerate the transition of plants that currently make gas engine vehicles to EV assembly lines.
All right, Ed Lowe there helping us break down Ford earnings. You can see those shares lower by about 5% here on the day. The big gainers, though, this afternoon are Snap, Pinterest, and Amazon. Amazon shares up about 14%. They did beat on many of the main metrics for 4Q. A lot of folks now focusing here on the raise in the price of its Prime membership, a $20 raise going to $139 per year. Their Amazon Web Services business grew at about a 40% rate here. Subscription services grew at about a 15% rate. All in all, a really good quarter here, though. Guidance, though, actually came in a little bit soft, but people seem to be looking past that 1Q guidance, particularly on the operating revenue.
You might be able to say that for Snap and Pins as well. Take a look at Pinterest. As we know, the fourth quarter revenue better than expected, all the way down the income statement. Adjusted EBITDA, EPS, much better than expected. The weak spot might have been that fourth quarter monthly active users. That's down to about 431 million versus estimates of 447 million. But the share price, if that just tells you anything, Pinterest is up 22%. Snap
monetization
is up 37%.
of their users. Monetization. We're all just commodities now, Taylor.
It was down 32% though before this report. Hey, and I don't know if you guys noticed, but Facebook, which we know lost 26% today, it's now up about 1.6% in the after hours.
Wow,
By the dip.
huge rebound.
All right, we got to run. Whoa, jam-packed Thursday. That's going to do it for our cross-platform coverage Beyond the Bell on radio, on TV, and on YouTube. We'll see you again, same time. It'll be Jobs Friday tomorrow.